Hey everyone, let me introduce to Venkat Avasarala, a friend of mine, been going back and forth with him. Highly successful, syndicator. He's got a big portfolio, him and his partner Ramana, who I also know. I've been very successful at it. Venkat is now going into more new construction, but I'll let him explain. So Ramana, bit of introduction, where you came from to where you are now.
Sure. So I'm Venkat Avasarala, based in Dallas, Texas, exactly Plano, actually. So my background was in IT. So I did about 14 years of corporate IT. My last job was with Bank of America. Ended up giving that up in summer of 2018, July 2018. And I was able to do that because I started syndicating commercial properties starting 2016. They typically your workforce housing, B and C class. So these are the properties built in 60s, 70s, 80s. We acquire them, we rehab them, we increase the rents, distribute the cash flow to investors, and sell them for a profit and distribute the profits to investors. So typical end to end. So I did about 13 of these with a partner, and that's 3,000 units valued at $300 million transactions, $300 million worth of assets, and mostly in DFW area. We still have 2,600 units in DFW area, and we have one property left in Colorado, Denver, Colorado. Used to own properties in Arizona and Oklahoma too. But early last year, just before COVID hit, we started looking at construction, doing ground up construction deals. And there is a particular several reasons for that, right? I mean, there is this insatiable demand for the new product from the agencies, from the institutions and pension funds and so forth. And the cap rates are severely compressed. So it pays to build these days, right? Not so much 10 years ago, but right now, this is the time to build and build and build. Obviously, you have to see where you're building. So what I've been doing is I'm doing some joint ventures with some very experienced developers. And I'm constructing a 156 unit build in Princeton, Texas, which is a suburb of Dallas, and 100,000 square feet retail in Full Share, Texas, which is next to Katy, Texas, very affluent area. And my latest project was in a city called Kyle, Texas, which is 20 miles south of Austin CBD. And it's a 338 unit ground up development. So about $100 million transactions in construction sites. So together $400 million worth of assets under management. And I brought equity from investors, right? I mean, just like me, right? I mean, mostly our people are busy working professionals, doctors, IT people, lawyers, and all that. I mean, who just have very busy lives, but wants to get involved in real estate investing. So I raised about $85 million from people just like me. And so that's the equity component, and used Fannie Mae and Freddie Mac loans for the most part, agency loans on the debt part. So that is how I did what I did.
Awesome. So obviously now we are getting into the new construction. So would that be the people you would like to connect? Same type of people, probably passive investors, but also who are
Absolutely.
interested in the new construction. So maybe, yeah, kind of go a little bit over where are you looking to do future projects in?
Absolutely. See, again, when you build something, the worst that can happen is like where you're stuck with it, right? I mean, you build it, nobody comes and lives with it,
Mhm.
or even the building, we cannot take it granted, right? I mean, there's so many moving parts in there. It's pretty tough. It's pretty hard to build, as opposed to buying something existing, right? So that's why I aligned with my partners. All three partners I took in for my three projects, they have at least 20 years of experience. The partner I have in Austin project, he has 45 years of experience. So I'm a big believer that, hey, I don't know what I don't know, right? And I cannot put my investors' money at risk. So I always try to bring in very, very experienced people who have done this so many times over and over again, so that I take the most of the risk component out. Now, the second thing is market selection, right? If you go in middle of, you can build in tertiary markets and all that. I'm not saying you shouldn't. It's just that you got to be much more precise and careful, right? But when it comes to the primary metros like Dallas, Austin, Phoenix, they are hot, right? People are moving here by leaps and bounds. And also that's one component. And the second component is when you build something, we need a seller. We need a buyer. Somebody should buy it from us, right? So we need to see a lot of activity, buying activity from from buyers. So those are the two criteria I have. I need to be in a primary metro, which is actually growing in both jobs and the population. And I need to see that activity of buyers so that they can buy it from us. So that is basically what I look for. And I have selected, that's why our Dallas and Austin, and I'm about to do some projects in Phoenix as well. Phoenix is an awesome market for a few different reasons. It's very good market.
Awesome. So we had a conversation, and you kind of opened up my eyes to a lot of things, especially in the BC. You told me a lot about the issues. So
Yeah.
can you get into that? Because a lot of people are not aware. There's a rosy picture being painted that might not be as rosy right now. So what are the problems? What are the issues going on with those BC complexes?
So whatever you heard, the rosy picture, that's all true until I would say 2018. Maybe a good part of 2019. See, this is the good part, or this is what made BNC looked very attractive all these days, because of the Great Recession, right? I mean, people lost jobs like crazy. I mean, you know what all happened, right? Anything to do with mortgage and a residential, right? I mean, it got crashed. So what happened is it created a once in a lifetime opportunity to go buy these apartments at insanely like pennies on a dollar, right? People bought Dallas 1970 property in Irving for $15,000 a door. That is not supposed to happen.
Right.
It's a glitch in the matrix, right? It's not supposed to happen, but it happened, right? So we rode a wave, right? Where we were buying at 15, selling at 30, buying at 30, selling at 50, and so forth, right? Everybody quickly move, right? I mean, making 2x, 3x in quickly 2 years. So you are in the right place at the right time. If you are in these primary metros, not just Dallas, right? I mean, any major metro, riding the wave all the way from 2012 all the way into 2019, right? So this is a curve. So you buy, and then you sell. You buy, you sell. Everybody did really well, and they cash flowed very well also, because, like for example, my very first deal in Dallas was $50,000. It's a 1960s property, but my rent was $850. That's insane. I mean, just think about it, right?
Yeah.
I mean, right? But you can't buy that for $50,000 anymore. Right now, I'm planning to sell it for $90,000 on assumption, right? They have to assume my loan. At that property, I'm ready to sell. But if they have to buy it cash, right? Meaning there's no loan to assume, then I would expect $100,000 per unit on that one, right? But what happened to my rents? The $850 went to like $1,050, maybe $1,100. The price of the property doubled, the rent barely moved. I mean, relatively, right? But so we are in a situation where that risk to reward ratio is not there, especially when you talk about workforce housing, right? So we are dealing with less than perfect tenant, less than perfect asset, less than perfect localities and all that, right? So you need a bigger margin of error just to see into these people's lives, right? I mean, they live paycheck to paycheck, and most of America is actually, right? And if their car breaks down that month, a number one priority is car. Not even the electric bill, the car, so that they can go find work and put the food on the table. And it costs $500. Guess who's not getting paid? The energy guy, the current bill gets paid, number two. And the third one is rent. I won't get paid that month, right? So you need higher margin of error, which was there when you're buying at $50,000 a door and collecting $850 rent. There's plenty of margin of error when that thing happens. But that got eroded. Class A, B, C, all are at 5 cap. Again, this is another glitch in the matrix. It's not supposed to happen. They have completely different risk profiles, right? But what do? I mean, they're all at 5 cap. And in some markets like Phoenix, they're at like at 4.5 cap. Imagine a C cap. If you tell somebody 20 years ago that one day a C-class property would trade at 4.5 cap, they'll laugh at you. But hey, this is where we are, right? So that was even before COVID. Now, after COVID, what happened is that obviously people lost jobs and government is sending some money, but nowhere close to what they were making, right? So what's happening is the delinquency shot up and crime shot up, right? Everything can be mitigated, But after COVID, our world changed upside down a little bit, right? So we had to fix several different problems. But these are the two main. There are a few other issues, but these are the two issues, right? The delinquency shot up and the crime shot up. Crime is very interesting, right? So when people lose their jobs and all that, right? I mean, that opens up a room where for the desperation, people to go do certain things that they're not supposed to do. That's pretty much one of them. And the domestic violence actually shot up because people who are not supposed to live with each other all day, every day. I mean, that is a perfect recipe for, domestic violence and all that. And that was happening. And delinquency, and when you couple this with the eviction moratorium, where you cannot evict people for non-payment. So the delinquency shot up. So and especially in Texas, where our taxes and insurance are the highest in the country, right? The highest in the country. Maybe New Jersey have higher taxes than Texas, but that's it. We are in the top 3 when it comes to the taxes. So what happens is our expense ratios are high. So if you bring $1 in as rent, we spend 55 to 60 cents as expenses. Now that's high expense. Now, if you compare that with states like Phoenix, where it'll only 35 cents, everything else is same. The rents are same, other expenses are same. The taxes and insurance are super low in Phoenix, right? So we are in Texas, which is a great overall tax burden on Texas citizens is low compared to most of the states. I give you that, right? But since we don't have any income tax, the Texas government try to get most of these taxes through property taxes, and we are the bill collector. We are the tax collectors for the great state of Texas here. So with these things in mind, it becomes very hard. And that's why we keep wonder, well, how can I generate more income for the property when my tenants are struggling to pay rent, but my expenses are at or even climbing? How do I balance them out? I always wonder, like, how can I get more income to the property?
Right. Gotcha. Yeah, no, that's where we were talking, where what I do kind of helps the multifamily syndicators, especially the BC, where you talk about electricity, you talk about internet, all that stuff, that if you're able to provide them for your tenants and you get essentially 20% commission on those billing volume, that could easily add up. And we don't have those contracts. It's just the tenants, whatever they pick, they choose. You provide a site for them and through us, and you get the billing commission from that. So that's where we talked about, like, if I knew you a long time ago, maybe it would have been useful that I didn't share before. So yeah, no, I would say, people should start looking at that. Anybody interested in that, please get in touch with me. I don't share that much.
No, but tell me how it works, right? So everybody needs energy, and my tenants are right now buying from somebody else. How does it work? How do they buy energy from me? And how do I, when I say me and my partnership and my investors, how do we benefit out of that?
So basically, right. So we basically brokerage and market all these top providers like AT&T, all these people. Even energy is NRG, we basically provide at the cheapest market price, or cheaper than the market price. That's the benefit for the tenants. And for my syndicators would be that we would provide the website, and all you would ask is the tenants to go buy from the site. And as soon as they get the services from there, it's automatically credited to you. And every time they pay their bill, you automatically get that commission. There's no involvement, there's no contracts. It's just a one-time setup, and that's it. There's a very minimal cost in setup, and after that, it's tenants and them paying their bill, essentially.
Yeah, I mean, just think about the economics on this, right? Let's say you make $10, right? Let's just assume the bare minimum, right? $10 a unit, and my average size is 250 units, right? I mean, my portfolio. So that's $2,500 a month. Times 12. So that's about $30,000 a year. And this is extra income. There is no expense that I would incur to gain this income. So that's 30,000. And you give a 5 cap, that's 20 times 30,000. That's $600,000. So just by doing this thing, I forced appreciation on my property by $600,000.
Right.
That That's very good. I mean, that's very good. And I could use that extra $2,500, right? It's like 3 people paid rent, right?
Right.
So it'll help me with dealing with my, with delinquency and all that a lot better, right?
Yeah, no,
No, that's
you
fantastic.
explained it way better than me. I couldn't explain it that way. So
Yeah, I mean, whenever we syndicators, right? I mean, when we anything recurring, if you talk about one-time thing, okay, that's good. But
yeah,
when you say even $1 recurring, we quickly try to multiply it by 12, multiply
right.
it by 5 cap rate. We're just trained to do that.
Gotcha. Awesome. All right. So the last 2 questions, fun questions. So let's see. What inspires you to get up and do what you do every day?
Well, honestly, it's my desire to stay financially independent, right? 2008 recession, right? I saw people got hurt. I was afraid. I was on a large project at a multinational company here in Plano, working on a SAP project. It's a $4 billion project. It's funded through 2012. I know that I'm going to have a job, but back of the mind, what if I lose my job, right? And at the time I was on H-1B, and you can't be out of work for more than 3 months. The stress, right? The back of the mind, the monkey on the back, right? It's like, oh my God, what will happen if I lose my job kind of thing, in every which way, financially, immigration wise, every which way. So that created a passion in me that, you know what? I need to be financially independent. What that means is I need to generate more income passively than what I'm generating out of my day job, right? So if that job, something happens to job, I have something to fall back on. So that was the passion which drove me into commercial real estate. And I was doing a full-time job while doing commercial real estate from 2016 to mid 2018. And I was working 16, 18 hours a day. And I just sacrificed so much and I got what I needed. Now, after that, what motivates me is to stay financially independent, right? I don't want to go back to a job, right? So nothing wrong with the job, I say. I mean, a lot of people talk as if like job is a bad. Look, I wouldn't be here if people wouldn't give me job, right? I developed my skills, right? How to talk to people, how to collaborate, teamwork, influencing. Nobody taught me. My job taught me, right? All the soft skills that I acquired in my IT career, I was able to transfer them into real estate and able to influence people to work with me, to award me the deals, to give me money to invest, right? Job is a good thing, but it's what you make it out to be, right? But yeah, in my case, I did my 14 years of corporate IT. I want to give that space to somebody else. I don't intend to hang on to that spot forever, right? Yeah, that's it. I rode my train. My stop is here. I get off. Somebody takes my seat and move on. That's how I see about jobs. Jobs are very important, right? But in my case, I don't want to go back to a job. I want to work for myself and want to stay financially independent. And that pretty much motivates me to get up every day and just go to work.
Gotcha. Awesome. So, you had a long, successful, obviously, stint as a real estate investor, and prior to that, you didn't go and get into much depth into your job. You had a pretty successful stint as job.
Yeah,
You managed a lot of people. So what's the one thing you can share that you learned that has helped? It could be professional or personal life, whatever is one thing you can share with others that can help them too.
Yeah. So the mindset, guys. I mean, look, money is not everything, but money is really important. I mean, it's really, really hard if you're living in a major metro, paying the mortgages, taxes here. Money is an issue, right? So I think people's mindset has to be like a bit of a delayed gratification, right? And think about, how do I solve this problem, this money problem, so that we don't have to worry about it, right? So that we can truly live our life the way we want to, right? We're too much control. We are obligated to do several things. If we depend on this job and if we don't properly invest, if money is an issue, it looks like we have free will. No, we don't. We got to be there, whether hook or crook at 9 o'clock, we got to be there. We want to go back to home for whatever. No, we got to be there at 5 o'clock, right? You don't like a certain job. No, you got to do it because your boss told you so. No, you don't want to fire that guy because you understand how important this job is. But no, the orders came. They need 5 scalps, so I need to give them that. So what I realized is I'm doing so many things that I would rather not, right? That's the freedom aspect. The other aspect is money, right? All the time worrying about money is like, it's not healthy, right? So I want to actually solve once for all these two properties. And this is the mindset I want people to think into, because these are not just problems unique to me. A lot of people have these issues, right? And another thing I see is a lot of people don't even recognize them as problems and keep on living their lives without acknowledging that this is a problem and I need to solve it. And this is the plan. This is how I would solve it. So I would say people to be very conscious about what's going on around you, what's going on through your lives, jot down all the issues that you're facing through and put a plan together today on how you want to solve it.
Awesome. That's a great tip. There's a lot of information in there. There's a lot of tips in there, actually.
It's a lot of philosophy too.
a lot of tips in there. All right. Thank you, Venkat, for taking the time. As you can see in the background, he's got 2 companies there, so you can reach out for that. And as he mentioned, if you're interested in getting involved in his projects, either as an investor or potentially, projects that he can get involved in, it would be great to reach out to him. I'll post all his links, both in the LinkedIn and the YouTube, wherever you're watching. So please reach out to him. Again, Venkat, thank you for taking the time.
Thank you so much, Roger.